Welcome to MMO Crypto. Today, we are unpacking a monumental revelation from the SEC that goes beyond the crypto space, potentially signaling shifts in the entire economic landscape. This isn't just any update. It's a piece of news that could shape your financial future, whether you're invested in crypto, stocks, or other markets. What we're covering today may be one of the most important financial discussions you'll hear in recent months. So, if you're serious about understanding what's going on behind the scenes and preparing for what lies ahead, stay tuned. Before we delve into these critical updates, I invite you to join our Discord community. It's a space where we dive into topics like these, examining market trends and uncovering insights to help you stay prepared. There's no cost to join, and the value you gain is priceless. Check out the link in the description. Let's arm ourselves with knowledge and stay a step ahead as we enter a potentially turbulent period. Let's start with the fundamental question. What is inflation, and why does it seem that the official reports on it don't match up with reality? Inflation, as measured by the Consumer Price Index, CPI, is a crucial economic indicator that influences everything from policy decisions to individual financial strategies. Yet since February, many financial analysts have voiced skepticism about CPI's accuracy, suggesting that it may be underreported to paint a more favorable economic picture. This isn't the first time the authenticity of economic data has been questioned. Government statistics have long been accused of being selectively managed to create a sense of economic stability. Take, for instance, a 2018 report that revealed a public awareness shift. People started realizing that the data fed to them might not truly reflect their financial realities. These suspicions aren't baseless. They're grounded in a pattern of data manipulation spanning several decades, where government-reported GDP, employment, and inflation numbers have all been accused of being massaged to fit specific narratives. This manipulation of inflation data can have far-reaching effects. If inflation appears lower than it actually is, it encourages individuals and businesses to make financial decisions based on an illusion of stability. This can lead people to overspend, overinvest, or underprepare for potential downturns, believing that the economy is far more resilient than it actually is. When the real inflationary pressures eventually reveal themselves, it may be too late for many to adjust, leading to potentially devastating financial consequences. Furthermore, distorted inflation figures impact every aspect of our economy, from how people budget their monthly expenses to the confidence investors place in the stock market. These numbers have a profound effect on our lives. The reality is that the current economic stability is far more fragile than the data would suggest. This isn't just about numbers, it's about understanding the potential instability that lies beneath the surface and being prepared for when it inevitably comes to light. Recently, during a high-stakes presidential debate, a glaring issue went unaddressed: the actual state of the economy. Topics like rising national debt, inflation, unchecked government spending, and unsustainable consumer debt levels were completely ignored. Financial experts, including Peter Schiff, have openly criticized this, describing it as a disgrace and a missed opportunity to address some of the most pressing financial issues facing the country. The silence on these issues may be strategic. By diverting the public's attention away from these critical topics, politicians can avoid raising alarm over the economic challenges that are becoming harder to ignore. Instead, we're fed stories and narratives that keep us engaged and entertained, without drawing attention to the fact that the U.S. economy may be teetering on the edge of a financial crisis. This intentional silence effectively keeps the public unaware and unprepared, delaying a much-needed reckoning. The consequences of ignoring these economic issues could be catastrophic. When the public finally becomes aware of the true state of the economy, the shock could lead to a financial panic, affecting markets, consumer confidence, and even the basic functioning of society. By failing to address these issues head-on, the government is setting the stage for a crisis that could hit without warning, leaving the average citizen unprepared and vulnerable. The lesson here is clear. We cannot rely solely on political leaders or mainstream media to keep us informed. It's up to each of us to seek out the truth, look beyond the distractions, and understand the economic forces at play. If we don't, we may be blindsided by an economic crisis that could have been anticipated and mitigated. One of the most alarming issues facing the U.S. today is the national debt, which is growing at an unprecedented rate. The country is now spending over $100 billion every month just to cover the interest on its debt. This astronomical sum could be funding essential services, education, infrastructure, healthcare, but instead it's being used to pay off past debts, creating a cycle that seems impossible to escape. Treasury Secretary Janet Yellen has warned that the national debt could hit $50 trillion by 2030. At the current rate, it's likely will reach that figure even sooner. The implications of this are staggering. To put it into perspective, even if the Federal Reserve were to cut interest rates significantly, the cost of servicing this debt would still be double what it was just a few years ago. This isn't just unsustainable, it's a financial catastrophe waiting to happen. This escalating debt is driving the U.S. toward a crisis that could have severe consequences not only domestically, but also globally. If the U.S. were to default or face a debt crisis, the repercussions would ripple through global markets, affecting economies worldwide. This isn't just a theoretical risk, it's a very real possibility that we should all be prepared for. As investors, citizens, and participants in the global economy, understanding the U.S. debt trajectory is crucial. The national debt is no longer just a government issue, it's a crisis that affects everyone. If we don't address it, the consequences could be catastrophic, with far-reaching implications for financial stability and the quality of life for millions of people. The labor market is often seen as a barometer of economic health, and right now, it's flashing warning signs. Unemployment rates are rising, and this trend is eerily reminiscent of the early stages of the 2001 and 2008 economic downturns. Rising unemployment isn't just a statistic, it's a real-life consequence that affects families, communities, and the economy at large. When people lose their jobs, they spend less, which in turn affects businesses and leads to further job losses. A vicious cycle that can quickly spiral into a full-blown recession. What's even more concerning is the SEC's recent communication. A leaked memo from Chairman Gary Gensler included internal comments that seemed aimed at downplaying the likelihood of an imminent crisis. But the data suggests otherwise. Rising unemployment, stagnant wages, and an increasingly precarious job market all point to a labor sector under stress. This disconnect between official statements and actual economic conditions should be a red flag for everyone. Unemployment doesn't just affect individual families. It has a ripple effect throughout the economy. When unemployment rises, consumer spending drops, leading to reduced demand for goods and services, which in turn affects businesses and the job market as a whole. If this trend continues, we could be looking at a recession in the near future, and it's essential to be prepared for the economic fallout that could follow. In financial history, there's a recurring pattern that often precedes significant crashes, a melt-up phase, where markets surge rapidly, driven by optimism and a flood of capital. Right now, we're seeing signs that this pattern may be playing out once again. There's $6.03 trillion sitting in money market funds, ready to enter the market. This massive pool of sidelined capital could trigger one of the most significant market rallies in recent years. This melt-up before meltdown pattern is one that experienced investors recognize. It's a period of exuberant growth where everyone seems to be winning until they're not. When the initial excitement fades, reality sets in, and the market often crashes. For those investing in crypto or other volatile assets, understanding this cycle is crucial. It's tempting to get swept up in optimism, but history shows that what goes up must come down. In the crypto space, this dynamic is particularly important to understand. While short-term gains are enticing, they can lead to devastating losses if investors aren't prepared for the crash that follows. Being aware of this cycle can help you avoid the common trap of buying high and being left exposed when the market inevitably corrects. The U.S. is increasingly becoming a two-speed economy with a sharp divide between the wealthy and the struggling working class. High-income households have continued to build wealth thanks to rising asset prices and favorable policies from the Federal Reserve. Meanwhile, low-income households are finding it harder and harder to make ends meet, even for basic necessities. Retailers like Dollar General have reported declining sales as more customers struggle to afford essential items. This divide isn't just a temporary trend, it's a symptom of deeper economic issues. Federal Reserve policies that have propped up asset values have disproportionately benefited the wealthy while doing little to help those in lower income brackets. This two-speed economy is unsustainable in the long term. If a large portion of the population can't participate in economic growth, the economy as a whole suffers. The growing wealth gap is a ticking time bomb, and if it's not addressed, it could lead to social and economic instability. Income inequality isn't just a moral issue, it's an economic one. When a significant portion of the population is financially strained, consumer spending, the backbone of the economy, takes a hit. The two-speed economy is a warning sign that the current system may be unsustainable. Addressing this issue isn't just about social justice, it's about ensuring the long-term stability and health of the economy. The U.S. economy is facing a series of critical challenges that are largely going unnoticed by the public. In the past year, over 1 million full-time jobs have been lost. Bankruptcies are at their highest level in 14 years, and the savings buffer many households built up during the pandemic is now depleted. This isn't just a collection of statistics, it's a clear sign that the economy is under severe stress. The mainstream media may not be focusing on these issues, but that doesn't make them any less real. These hidden economic dangers are accumulating, and when they finally come to light, the impact could be devastating. Without meaningful action to address these issues, the U.S. risks facing a financial crisis that could have far-reaching consequences for years to come. For investors and everyday citizens alike, understanding these underlying economic risks is crucial. Being aware of the true state of the economy can help you make informed decisions and prepare for the potential fallout. Ignoring these warning signs could leave you unprepared when the crisis finally hits. As we look ahead, the importance of being informed and prepared cannot be overstated. The market may experience a rally, but it's essential not to get caught up in short-term gains. Take profits when the opportunity presents itself and remain aware of the broader economic risks. The signs of an economic downturn are too strong to ignore, and staying vigilant is the best way to protect yourself. Thank you for joining us for this deep dive into the current economic landscape. If you found this information valuable, please give the video a like, subscribe to MMO Crypto, and enable notifications so you never miss an update. And don't forget to join our community, where we discuss these topics in greater detail. The link is in the description below.